Hey guys, and welcome to another Rogue Trading Communities video, and this video is about volume divergence for entries. So we're going to specifically talk about Wyckoff entry methods. So as you guys know, if you're already an existing subscriber of our Rogue Trading community, so you know for a fact that we have made n number of videos just related to Wyckoff schematics. But in this video, we're going to talk about the entry. So let's say when you're getting that authentic breakout, what makes it a good breakout and what makes it a bad breakout, right? So I'm going to give you one of the confirmations that I personally use in my trading framework. And this video is specifically for those people who at least know what is Wyckoff schematic. If you're completely a beginner, if you don't know anything related to Wyckoff schematic, don't worry about it. I have already made a video on explaining what is Wyckoff schematic and the theoretical aspects of it with some good examples. I've made a video about it. Just click on the link in the description, go ahead, watch the video completely and then get back to this video. But if you're already aware about what is Wyckoff schematic, then you can continue it. Okay, so let's get started. First of all, let's understand what is volume divergence. Well, a volume divergence refers to a natural behavior of volume where it gradually decreases during consolidation, which is usually the phase A to phase C of the Wyckoff schematic cycle, and then suddenly increases during the breakout phase. Whenever there is a breakout that happens in a market, whenever there's let's say you have a consolidation, the sideways market, and that sideways, whenever you're getting that breakout, volume starts increasing. That is usually the phase D of the Wyckoff schematic cycle, signaling the smart money participation. So this is where usually the smart money is actually, they are pushing the markets. They are actually buying with a huge quantities out there. So that is the reason you get more volumes at the breakout phase. But how do you define this actually? How do you define smart money participation? Well, that's what I'm going to explain in this video with some good examples for you guys. Okay. This shift in volume is a key confirmation for a valid breakout. Now you might have wondered about it. Now let's say I have a simple line chart right here. So those who know Wyckoff schematic, let's say this is phase A, okay, stopping of the trend. Phase B is all about absorption. Phase C is about the final testing phase, and phase D is about the breakout, and the phase E is further momentum. And that's what the Wyckoff schematic phases is all about. Okay. Now, when we talk about it, the volumes, okay, let's say usually you have some kind of a volumes, right? So technically you have some kind of a volumes start decreasing from phase A to phase B. Until the end of phase B, volume starts decreasing. But as market starts giving you that breakout, right? As market starts giving you that breakout, volume starts increasing actually. This phenomena is called volume divergence for entries. Okay, this can actually give us some kind of an idea that smart money participation is beginning in the market. So the further momentum is expected in the market. This is where we have to be aware about, and we can look for good opportunities in the market. Okay. To explain this, I have prepared good examples for you guys. I have prepared example both in Indian markets as well as in US markets, because our viewers are not just from Indian markets. There are people who are from different countries out there. So hence I am gonna make a lot of content in other markets as well from hereby onwards. Okay, because I just want to prove a simple fact that our framework works on all the markets out there. It doesn't matter what kind of markets you want to trade. You want to trade equity markets, which is also known as the stocks out there. You can trade the derivatives market, especially the futures. It will be great. If you want to trade the cryptocurrencies, which is Bitcoin, Ethereum and Solana, you can also trade that. If you want to trade Forex, well, every single market out there, these concepts are applicable. All you have to do is, when I teach you something, right, just do some back testing. Okay, go ahead, go to the chart, try applying the levels out there, try recognizing a horizontal corrective, and then you can apply these concepts and you will get to know about it. The only way you can build your knowledge is based on practical experience, which is practice. Okay, the more and more you practice, the better trader you're going to become, right? Now, let's get started. First, let's understand some examples of volume divergence right now. Now, as you can see, we have the chart, and this is NTPC Limited, one of the stocks from National Stock Exchange India. Okay, this is an Indian stock. So I have a clear cut horizontal corrective right here. Within that horizontal corrective, we have a simple Wyckoff structure right here. Okay, I've drawn everything perfectly for you guys. I've labeled everything so that you can understand it. Now, the thing you have to observe right here is the volumes right here with the price. Don't compare only the volume. Compare the price also with the volume. See whether you're getting that breakout when there is an increase in volume or not. You see, from this point, this is where the phase A starts. Okay, this is a phase A starts. From this point, volume started decreasing. There is a spike right here. I'll talk about it. Okay, don't worry. Just ignore this spike as of now. I'll talk about it. There's a volume. Eventually, it starts decreasing until this point. Until this point. This is where the phase B ends and this is where the phase C starts actually. Those who know Wyckoff theory, they will understand what are the phases actually. So that is the reason I told you in the beginning of video, go ahead, watch the Wyckoff theoretical video and then get back to this video. Okay. Then once the spring phases or once the testing has been finalized right here, look at the volumes right here. As market is giving you that breakout, volumes also started increasing right here. This is a good confirmation of smart money activity in the markets. Okay. And let me get back to this point. Here you have one spike right here. And I also told you, right? You shouldn't just compare the volume. You should compare the price also. While let's say you have consolidation, you're not taking a trade on the phase A and the phase B. Until unless phase A and phase B completes, then only you'll be looking for an opportunity, right? Until that point of time, you will never and ever take a trade. Okay, remember that when it comes to Wyckoff schematics, when it comes to a horizontal corrective, you have to wait for the phase A and phase B's completion and then you have to look for authentic breakouts. Before that, you're not going to look for any kind of breakouts out there. Okay, you have to wait for that horizontal corrective to complete, absorption to be completed. Now, in this case, you're getting that spike in the phase A itself. And also think about it. If you're getting this much of a spike, right? Then technically, it should have broken the level, but it's not. You're getting that spike within the Wyckoff area. What does that indicates? See, it's very simple actually. In a sideways market, both buyers and sellers are present. So there is a very random activity that goes on. Constantly buyers are entering, constantly sellers are entering. It's constantly someone out there around the world or within your country, whoever is trading a certain, instrument or a certain financial instrument out there, someone is buying and someone is selling. Some kind of a trading activity is always going on. So that is the reason any volume that occurs in a sideways market is very random actually. So that is the reason we don't actually consider, some kind of a buying climax, upthrust, no demands or no supplies, anything within the consolidations. But rather, we only consider the overall volume actually. See whether while giving that breakout proper, see this we have a creek in the ice area right here. And then we got the upthrust level and the spring level. So technically, this is my stronger resistance. Right, this entire area right here, this entire area has become my creek area based on the Wyckoff schematics. Now think about it. Now this creek area itself is breaking properly. So while giving this breakout, volumes also started increasing. This is a sign of a good breakout in the Wyckoff schematic approach. And based on this, you can actually pinpoint your entries the right way and you can get these kind of results as well. The same thing, okay? You got a confirmation, retracement and bounce. Market started creating a momentum. That's how it is. Let me show you one more example right here. See, here, clear cut, we have a consolidation. Okay, phase A and phase B, we are not looking at any kind of volumes right here. You see, even here you got a spike of volume. But did that spike break the level? The answer is no, right? Rather, it was inside my Wyckoff area itself actually, Wyckoff value area. It was inside my Wyckoff value area itself where the consolidations are occurring. Now phase C got completed. Phase B got completed right here. Now see, volume got reduced. As market is giving you that breakout, volume started increasing right here. And look at the move. This is only possible, guys. Let me tell you one more thing. I've given you some examples right here to show you how things work. But if you want to capture this move, a higher time frame location plays a very crucial role. Please understand that. I have already given n number of videos. If you don't know much about it, then watch multiple time frame analysis part 1 and multiple time frame analysis part 2 video to get some idea how to do multi time frame analysis. Okay, so that's what it is. Now we are into different markets out there. This is Nvidia. Okay, this is listed in Nasdaq, which is US markets. Okay, so as you can see right here, clear cut consolidation, same thing. Okay, we have a buying climax AR. So phase A got completed right here, then phase B, and eventually you got the spring. The testing phase has been completed. Look at the volumes. Volume got reduced, and as market is giving you that breakout structure, market volume started increasing right here. This is one kind of a confirmation. Okay, there are multiple confirmation when it comes to recognizing which is the authentic breakout or which is a false breakout. Well, this is a major confirmation for me while personally when I'm trading, right? That's how it is actually. Simple. This is one of the major confirmations no matter what. If there is, while market is giving me that breakout, if there is no volumes that's building up, then I stay away from it. I wait for it and then I look into it. And at the same time, sometimes if there is no volume, market can go up and again it can come back into my value area. So this also plays a very crucial role. You have to understand whether that's going to break out, it's going to sustain or not. That also plays a crucial role. I'll show you some examples as well. See, good momentum. That's how it is. Now see right here. This is JP Morgan Chase. Okay, this is also listed in New York Stock Exchange, US markets. We have a clear cut horizontal corrective. Okay, simple. And within that, we have all the phases that's been done. And you can see the volumes right now, it's started decreasing until this point. Okay, and as market is giving you a breakout, it started increasing. Right, the overall markets, you don't have to count individual volumes of the overall volume. See whether you're getting that increase in volume while market is giving you that breakout. And please understand, if let's say you got an upthrust right here, okay, if you got, all the students of the rope trading community, they know for a fact, because I haven't made much content in Wyckoff schematics on how to recognize a good upthrust or a bad upthrust. But once you get that upthrust, this is very important because you need that area. Okay, but if the market is also dominating this area and giving you that breakout structure, that is a sign that market has started its momentum. While giving you this breakout, if you are having this increase in volume, that is a good sign of a further momentum in the markets, right? And you can actually achieve these kind of results as well. It's possible. It's not something, it's not some kind of a rocket science or something like that. It's definitely possible. All you need is a good amount of knowledge and a good amount of practice. This makes you a good trader. Okay, now, and here I have something interesting for you guys. I'm going to teach you something extra today. Okay, so here, as you can see, same thing. Okay, market started its consolidation, and this is your phase A and this is your phase B, and eventually market created that spring and market started creating a momentum. Observe carefully. Here we don't have much of a good volume divergence. If you observe carefully, there's a lot of spikes right here. You might be confused. So there are a lot of spikes. How do I define it? When you don't have volume divergence also, you can just wait for a good breakout and you can take the trades according to it. Okay. Volume divergence is just a confirmation at the end of the day. Sometimes it gives you that good signals, but if it is the breakout, whatever the breakout you're getting at, whatever the breakout you are getting right now, if it is giving you more volume compared to all the volumes out there from the beginning of the phase A to up to this particular point of time, that could be also a confirmation for you guys. In the sense, as you can see, we don't have a good of a volume divergence right here. See, almost all the volumes are almost equal right here, right? There are some spikes. So some people might get confused, like, oh, there is no some kind of a, divergence right here. So how do I define it? It's very simple. See, until this particular point of time, market was in a consolidation. Now, as market broke the structure, as market broke my creek area, you can see you got this much of a volume right here. And compare this volume with all the volumes from phase B actually. From phase B was the beginning actually. You got a high volume activity, weakness, and market went down right here. Okay. But compared to that point, as market is giving you a proper breakout with a very increasing volume at the end of the breakout, that could be also a confirmation for you guys. Okay. I hope you understood this thing. So this is one of the confirmation when it comes to volume divergence. I hope you understood how these things work actually. There are other confirmations that such as demand and supply divergence. I personally use it. Weakness and strength, obviously, you can actually identify what kind of weakness and strength that's being built at this point of time, right? What kind of weakness and strength that's built at this point of time. Or you can get one more confirmation. Let's say this is a 15-minute time frame. If there is a lower time frame like a 1-minute schematic, I have already made a video called multi time frame, multi Wyckoff series actually. So I made a live video. I took a live trade and I made a video about it just recently, 1 or 2 videos prior. You can go ahead and watch that video and understand how I've taken a trade within a sideways market. Well, you get consolidations on all the time frames. And let me tell you this, every consolidation has a Wyckoff structure. If you can understand Wyckoff structure, it's very easy. Do not go with a very linear approach. In the sense, I'm not telling you to follow some kind of a rule right here. Okay, it's not a rule actually. This is just that, Wyckoff schematic, this concept helps you to understand what's happening in a sideways market. You try to read the market. You try to communicate with the market. That's what our training framework is all about. We are not following some rules-based strategy. Oh, we're getting a breakout right here and let me take a trade. No. What if I can anticipate, let's say market give you a breakout. What if it comes back again to my value area? This is also possible. But how do I confirm whether it's an authentic breakout or not? Well, there are set of confirmations as well, technical terms. Okay, so that's how even we approach it in the rogue trading community. I hope I have given you some kind of a knowledge out of this, but don't worry. Go to the link in the description, watch the videos, and also there's our mobile numbers and as well as our Telegram and WhatsApp numbers. You can message us anytime if you have any doubts personally, and I will personally talk to you if I'm available. Okay, so that was this video. I hope you learned something out of this video. And I'm gonna bring up some more good concepts in the upcoming days. And yeah, I'll see you in the next videos. Goodbye and have a great day.